Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with the European Session Outlook. We'll start with the North American markets. The US dollar gave back some ground versus major rivals on Friday after a batch of mixed economic data, but avoided a third straight weekly decline. The Empire State Manufacturing Index continued to improve and rose in March to the highest level since January 2015. It came out 7.35 better than expected at 9.56. Meanwhile, the industrial production fell last month by more than expected, coming out 0.5% worse than expected at negative 0.6%, and the preliminary University of Michigan Consumer Sentiment Index for April eased. The capacity utilization for March was 0.6% worse than expected at 74.8%. The Dow is 9 points gap down, NASDAQ 30 points gap down, Dixie down to 94.74 from 94.97. The USD Canadian dollar 90 pips gap up, 40 pips up today. USD JPY 62 pips down, 60 pips gap down today. Tier 2 event for today, NAHB Housing Market Index for April from the US. And for the week, we have Canadian data. On Tuesday, Bank of Canada Governor Polo's speech, and on Friday is CPI data. For the European markets, the Eurozone trade balance seasonally adjusted came out 1.7 billion euro worse than expected at 20.2 billion. Today we have the German Bundesbank monthly report. The euro took a step back last week as global equity markets rallied, and despite the proximity of the European Central Bank's April policy meeting, the move was likely unrelated. On Thursday, we're going to have the ECB interest rate decision and monetary policy statement and press conference. The expanded quantitative easing program kicked in on April 1st in Europe, while the TLTROs have yet to, meaning their impact can't be measured for a few months. As a result, with the European Central Bank set to keep rates unchanged, traders should be focusing on President Mario Draghi's press conference this Thursday for clues as to what the central bank will do next. Alright, on to the UK markets. After a rough few weeks against the euro, the pound finally got a respite. Sterling had its first week of gains against the euro for over a month. Nevertheless, things are far from good for the pound as the economy is showing signs of a cool down. The Bank of England wasn't helpful either, as they announced that their hands are tied before the referendum and they are in no hurry to make a move on interest rates. The sterling added 0.2% versus the euro and 0.5% versus the dollar Friday. On Friday, we also had the official kickoff of the referendum campaign, as polls are currently putting the Leave campaign ahead. The FTSE 100 lost 30 points and closed at 62.84 on Friday, and the 10-year gilt yields closed at 1.45% on Friday. The biggest movers was the GBP New Zealand dollar, 110 pips down Friday, 195 pips range, and against the Swiss franc, 95 pips up on Friday, 75 pips range. This week's events are few for the pound and again are mainly on Thursday. We're going to have for the week the climate count rate, ILO unemployment rate, average earnings including and excluding bonuses, retail sales plus retail sales ex fuel month on month, year on year, public sector net borrowing, and that would be it for the week. Alright, on to the Asian and Pacific markets. Overnight today, the CPI from New Zealand came out quarter on quarter 0.1% better than expected at 0.2%, and the year on year was as expected at 0.4%. A deadly series of large earthquakes in southern Japan may add to the case for Prime Minister Shinzo Abe to increase fiscal stimulus and postpone a planned increase in the nation's sales tax. The Nikkei was 120 down on Friday, and tomorrow the Royal Bank of Australia will release its meeting minutes and Governor Glenn Stevens will hold a speech afterwards. Last section for the day, commodities. Baker Hughes oil rig count came out one more than before at 351. The oil prices tumbled on Monday after a meeting by major producers in Qatar collapsed without an agreement to freeze output, leaving the credibility of the OPEC producer cartel. Geopolitical tensions between Saudi Arabia and Iran were blamed for the failure, which revived industry fears that major government-controlled producers will increase their battle for market share by offering ever steeper discounts. The gold had a range of $11 at $12.35 now. Silver had a range of 28 cents at $15.15. Crude oil had $1.70 range down to $38.56. And natural gas is trading at $1.87 at the moment with a range of 8 cents. Thank you for the attention today. That was all, and I'll see you next time. Goodbye.